What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. We're going to be going over the markets. Obviously, there's a lot happening in the markets this morning with traditional markets coming down. How far will they come down? And guys, always remember, there's huge opportunity in the markets, whether they go up or down. You just have to find them, and trading is one way to do that. So we're going to take a look at what's going on. We're going to take a look at, the big picture, what I believe is happening and where I believe everything is headed. We'll also be taking a look at, the possibility that the markets continue up for a new higher high. Hit one if you think they're going to be able to kick the can down the road and go up even higher. Or if you think the top's in, hit two. I'm curious to see what you guys have to say. Without any further ado, make sure you guys smash that thumbs up, leave your comments down below, also subscribe to the channel and tick that notification bell. Let's get into it. First, we're going to look at the US 10-year yield. As you guys see, we've been talking about the US 10-year yield boosting up to around the 7 to 8%, somewhere in that area. I still believe that's a good possibility. We'll see what happens in the markets. Obviously, no one can predict the future. I'm not a financial advisor in any way, but I am showing you my view of the market, and it's been the same for a long time, although I thought last year was the top for the markets and Bitcoin. This year could definitely be it. Not to say we can't go a little higher and everything else, the DXY and everything retrace, but I still believe this breakout right here from this broadening wedge should get us up somewhere around that 7% range. And I've talked about it before with the housing market and everything else with inflation, that, people are at the moment where they're really not able to afford housing. Also, the banks are getting really strict on the loans. Obviously, the banks are in trouble, but we'll see what happens here. Just be cautious and be careful, guys, because this could get really ugly. Next, we'll go into the DXY. All right, and for the DXY, don't forget, guys, we're going to go over Bitcoin. We're going to go over the small time frames and the larger time frames. I'm going to give you both the bullish and the bearish case scenario. We're going to look at the chart we've been following so far. Our Elliott wave count's playing out. But first, I want to take a look at the DXY. This is a very old chart of mine we've been looking for. So if this retrace, right, we put Fibonacci retracement from the top to the bottom here. If we do retrace and break this 107 level, I'm looking for the golden pocket zone around 108, 109. But if that breaks, we could go as high as 116, maybe even higher. I know a lot of people think the dollar is dying, which I think in the long term, the dollar probably will. I don't think it's going to happen this cycle. I think we're going to see a major market tragedy before that happens, but who knows? We'll see what happens. But as you guys know, I've been bullish on the DXY for a long time. Still am. And if you guys are interested in trading, use the link down below. Check out Prime XBT. You can trade Forex, gold, silver, oil, S&P, Dow Jones, crypto, everything all from one exchange. So you don't got to swap back and forth to different exchanges. Definitely check them out. You can use my promo, or actually this will give you my promo code by clicking a link down below. You can get up to a $7,000 deposit bonus and 25% off your trading fees. And here we are, Bitcoin. So this is the count I'm looking at, right? This is a 5-wave structure down that could get us as low as 42.8, 42.9 area, and then probably another bounce up. But will this all end up being just a wave 1 and then a wave 2? Or the bullish case, which we'll take a look at after this, so stick around because it could be a Wyckoff distribution area. So, but let's take a look at this. Let me get this over here. So we looked at this as a possibility of an ABC, right? We called this low right here, which we got, obviously. And that was just using the Fibonacci trend. Whoops, let me get this. Let me get that out of the way real quick. Okay. So if we go from the top here to the bottom to the top of this wave B, that was the 1-to-1 extension. We hit that perfectly. Now, if this holds, then we could be looking at distribution. We'll take a look at that next. But right now, we're going to take a look at the bearish case, right here, this wave count. Now within each wave, so this was wave 3, I believe, that we could be in right now. And if you look at the blue, this would be the 5 waves in wave 3. And right now it does seem like we're getting a little bounce here, right? Let me get these out of the way. Okay, so now this could be just a wave 1. Looking at this is wave 5, right? We had our ABC correction for wave 4 here, and now looking for 5, and that could look something like this. We may get back up into this area and then come down for 3, 4, 5, getting us to our 51.7, which would only be wave 3. So if we get down to this level, I am looking for a bounce. But of course, we have to pass the 1-to-1 Fibonacci extension first, which is 59,650. We break that, then I do believe we're going to see this 51.7, 51.8 range. Now, if you look over here on the right hand side, you can see these high volume nodes. They match up perfectly with all these targets, right? You see how big of a area this is right here at the 42.8. That's why I'm looking for that. But remember, if we do hit that, I believe this will be just wave 1, and we'll have wave 2 up and then a wave 3, making even a bigger. Let's take a look at that. What would that look like? That would look something like this, right? I'm not going to pull the fibs out right now because obviously we don't know that this is what's going on. But it could be something like this, get down to wave 3, way down here, something like this. But anyways, let's stick with where we're at. So as of right now, this is what I'm looking for. Unless, this 1-to-1 extension holds, and then this was just an ABC, and we have one more push up. And I'll show you where that would go here in the next minute or two. But first, let's look at the RSI. This is something I posted in my Discord. That link is down below. I posted this chart along with this one a couple weeks ago, right? This one a couple weeks ago, the RSI part just last week, I think I put it in there, but I had said if we break this, we're coming down. And let's take a look at where we're at. So it does show we should go a little bit further with the RSI. We'll see what happens here. But either way, that was a obvious break of the RSI showing this downward movement we have now. Let me get these waves out of here. But that's what I'm looking at, guys. So really keep an eye. If we break that 1-to-1 extension, I believe 51.8, 51.7 area might be a good place to long up to either the 56.8 or 59 range, right? And those are just Fibonacci retracements. If we get to that level from the top of wave 2 down to the bottom of wave 3, right? Our 382 extensions around 59.9, 59.7, somewhere in this area. And then we have our 0.23 fib, right? So this wave 1 was almost 100% retracement, wave 1, 2, right? Usually when you have a deep correction here, you have a shallow one for 4, and then your continuation. So I think there's some huge trade opportunities here. A lot of money could be made in just this move. You can make more in these little moves if played properly, using the correct leverage and risk management, using stop losses in case it doesn't go your way. You can make a lot more than this than just buying Bitcoin or just selling it at these levels, especially. I would not be buying Bitcoin at these levels personally. You do what you want to do. But anyway, that's that. Now, let's look at the Wyckoff distribution schematic 2 first. I'm going to pull that up right here. Is this the one? Nope, that's 1. Let's pull up 2. All right, here. So this could be what we're seeing here. Let me get this one out of here. Oh, what is going on here? Pull that up again. Right here. So this would be, both of these show, if the sign of weakness down here holds, which is that 1-to-1 extension, right? Then we could be seeing all the way up to around, let me move this over so I can see my price, somewhere in the 75.5 to 76 range, creating another high, which would probably get everyone bullish before coming down. Then another bounce here. Remember, back in 21, we called a distribution level perfectly. I gave you the 64 high, which we hit, and then came crashing down to 29. We could see something similar. This could end up a lot worse. But this is the first schematic. And then this, where's my other schematic? There it is. So here's the other one, schematic 1, showing that there could be 2 more highs, right? Which is a possibility. And that's if the 1-to-1 breaks. But the 1-to-1 has to break first. So here it is. Here would be your first high. This will be sometime in June. Have another crash down to approximately 63, 64 level. Get one more bounce up to as high as 77 to 80,000 range. Get a wick, and then the crash begins. But either way, I believe these scenarios are going to play out. I don't think we're going to hit 100,000. I could be 100% wrong, but I just don't see it with the way the world's going, the markets are going. Something big is going to break, and it's going to be ugly, in my opinion, right? Be careful and at least take that under consideration. Before we go any further, make sure you guys take a second out, smash that thumbs up, leave your comments down below, and let's get into the Dow Jones. So this was the Dow Jones, right? This is what I had been looking for. We had a wave count in this also, which we look like it's going that way so far. And our targets would be, if this was the top of wave 4 here, we would have to, let's put some Fibonacci extensions on here and look at where we're looking for wave 5 to go, right? So this would be wave 3 right here, and then wave 4, wave 5, if it's bottomed there. Let's see, or if it topped there, I'm sorry. So our wave 5 would be somewhere in the vicinity of anywhere from 37,440, which is a 0.5 fib, down to the 0.618, 0.65 golden pocket here. That's what I'd be looking for. And then you may see the same thing as I believe may be coming for Bitcoin. One more push up, make up this wave 1 and wave 2. Let's look at the big picture of the Dow. This is what I'm looking at. If at any point we break this bottom trend line, that would be a confirmation that the top is definitely in my opinion. And we're going to get something like the Great Depression, right? A big dump, just like we got here. Then that would get us down to around the 22, 23,000. Get another rally up, get people excited again to maybe 30, 32,000. We'll be keeping a close eye on this, guys. This could be over, obviously, the next year or two. But getting a rally back up and then the big crash. As you can see, I have these marked out. Your high, your low, your higher high, your lower low, and then the big rally, and then the crash. Just like the Great Depression, you had your high, your low, your higher high, your lower low, big rally, and then the crash. Now, in the case that they're able to somehow make this pump more, we could come up all the way up to this 44, 45 range, somewhere in this area, before actually topping out. But remember, once this line is broken, I think that's it. I think that would be time to get out of the markets, 100%. But again, not financial advice. You do you. We'll see what happens there. But I do want to thank each and every one of you that made it to the end of the video. And if you did, hit number 5, just so I know, and maybe leave a comment after that 5. But if you made it this far, I do appreciate you for sticking around. Definitely share the video. Get it out there. Give it a thumbs up. Subscribe and tick the notification bell if you want to get notified for all my videos. Thanks, guys. Have an awesome day. I'll see you in the next one.